All right, so basically what we're looking at here is that a long-term relationship going back 9 months to 2 years is basically, breaking down. It seems like high beta stocks are out and the healthcare, financials, consumer staples, and utilities are really in here. Now, according to this 52-week chart ending in April 29th from Standard & Poor's, the healthcare sector, which has lagged throughout 2009, is now getting ready to outperform. Now, the sector was just killed because of Washington reform, and now that headwind has abated somewhat. And according to Capital IQ, the sector is showing a Q1 earnings beat of 92%, and surprising to the upside, 15% of the time. Now, consumer staples, which just killed it in 2008 and the beginning of 2009 at the height of the financial crisis, are also getting ready to outperform. These guys have nice, juicy dividends and are beating Q1 estimates by 60% and showing an earnings surprise of 6.2%. But you got to watch those input costs in the second quarter, though. And utilities are also looking stronger, lagging staples and healthcare, but strong nonetheless. But earnings are a little dicey here. They are below estimates 45% of the time and have surprised to the downside by 43%. Now, I know you hate it, but this rotation is consistent with the sell in May and go away theme, and you got to look at Friday's jobs number. That's going to be pivotal in helping markets in general find direction. Now, according to briefing.com, the unemployment rate should rise to 8.9%. The key safe level is 8%, and the private sector should add about 200,000 jobs. But that number looks rough right now after Wednesday's disappointing ADP private jobs report. We've also seen in the last couple weeks initial jobless claims climb above that 400,000 level, and claims are kind of the leading indicator while the jobs number is actually really lagging. So it kind of clouds the job picture a little bit. So just for fun, I measured the S&P's performance from the Friday the jobs number was announced through the week after every month for the past year. Now here's what I came up with. When the numbers were awesome or solid, the SPX was flat or fell anywhere from 1/3% to over 2%. But when the numbers were mixed, disappointed, or just plain bad, the indices rallied anywhere from 1% to nearly 5.5%. Only August's report and market action bucked that trend. Now, history isn't a guide here, obviously, but it can be a fun blueprint. And we will be back right with your Thursday stock picks right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as this market's concerned, we got to take off those glasses